Fundstrat Global Advisors Tom Lee joins us with his predictions. Tom, it's great to have you back. I imagine you were listening just now, and I wonder if you take these sort of disparate signals out of earnings so far, and is that just characteristic of a period in which the job market may be in transition?
I think that's right, Carl. I know investors are wrestling with a lot of questions in their minds because inflation is higher than they expected at the start of this year, and rates are higher, and stocks are higher. So they're wondering if this is a payback period. And now we're hearing different forecasts for Fed cuts. And as you're pointing out, I think it's been an overall good earnings season, but we're hearing evidence of companies not being able to pass on price, and there's some demand weakness and wage pressures. I think that's part of the confusion that's taking place now. But to me, I'm kind of in the camp that despite all this, it's all going to come down to whether inflation improves in the next couple of months or the rest of the year. And if it does, a lot of these sort of clouds lift, and I think markets actually do quite well.
Which is why I think the consumer weakness commentary and the weakness that Chair Powell cited in terms of demand for labor, at least weakening back to pre-pandemic levels, is important, right, Tom? Shouldn't that ultimately bring inflation levels down?
That's right. I mean, I'd say the interview that CNBC did with Starbucks yesterday was very telling. I think that the answer ultimately there is they probably have to cut price, and if they're cutting prices, that's not reflation anymore. It's a reversal of that. And I think we're seeing consumers basically have their wallet getting squeezed because auto insurance and homeowners insurance has really sort of eaten in their discretionary dollars. And again, that's not really an inflationary signal. So I think the bar is actually being lowered now for the Fed to cut. And I think that's something I think many people picked up. I mean, the Fed stated it clearly. If the employment market even shows signs of weakness, that's another reason to cut rates, and we'll find out tomorrow.
Well, yeah, we're looking forward to seeing what the job market tells us, Tom. So then, does the playbook short term look like mega cap, or are you in the broadening camp and want to play in the other 493?
Well, yesterday was a good day for market breadth. That's why small caps rallied despite the S&P and NASDAQ being down. And, it really comes down to what interest rates do. I think that there's still a good probability rates are peaking now. And if interest rates are lower because we either get softer jobs or inflation weakens, that's a more 493 signal and obviously much better backdrop for small caps. So that would be sort of what we think leads in the second half. But I still like the technology story just because of all the drivers behind AI.
Although quite a reaction that we're getting on earnings. I think I read in a Goldman note, it's like almost, it's at least 3.5 times the normal reaction that stocks are having to earnings than they usually get off earnings season, which, I don't know, what does that tell us, Tom, that the market was rich going in?
I mean, it could be the market was rich, or the market is really grappling with trying to understand what the real narrative is between now and the end of the year, because on the one hand, if inflation's accelerating, then we would have a very different playbook in our head. And if demand is faltering, or if things are just fine, and that's why companies who are beating are doing really well. So I think that's the confusion. But, at the end of the day, I think as much as it feels bad because April was a down month, I still think probabilities favor May being an up month, and of course, that the market does well the rest of the year.
Yeah, definitely leaning on some seasonality trends to get some additional clues as to where we might go this summer. Tom, thanks. Good to see you as always, Tom Lee. And we are looking forward to hearing from Tom at the CNBC Financial Advisor Summit on Wednesday, May 22. You can scan this QR code on your screen to register for that event, or just visit cnbcevents.com/FA.